Good day. Welcome to another session of Fog Accountancy Tutorials. Today we are going to continue our lesson on the cash budget, and then we are going to do so by taking a question, a first practical question on cash budget, and then we are going to solve it and then trying to understand how it actually works in practice. And so without wasting much time, let us go on to our question, read it together, analyze it together, and then solve it together. Okay. The following are the projected sales of Basti Enterprise for the first half of 2018. So these are the projected sales for the 2018 year. January, we have 200,000 Ghana cedis. February, March, April, May, June, July. All these figures as you see. February 250,000, March 250,000, April is 300,000, May is 150,000, June 150,000, and July is 150,000. So these are projected sales. Additional information. All sales are on credit, and on the average, 80% is collected in the month of sales, and 15% in the next month. The remainder is uncollectible. Okay, so we continue. Overheads are 60,000 Ghana cedis a month and are paid as incurred. Okay, so we are told that goods are purchased in anticipation of sales in the month preceding the month of sale. Sales are invoiced at cost plus 20%. Okay, Ivan. Supplies are paid 1 month after the goods are received. All right. And then, general expenses are paid at 15,000 Ghana cedis each month. You are required to prepare a schedule of cash collections from customers from the period of January to June. B, disbursement for purchases from January to June. And then C, a cash budget for the period of April to June 2018. Assuming the cash balance as at 31st March 2018 was 20,000 Ghana cedis. Okay. Yeah, there is a question that we are going to analyze. Now, we have been given projected sales, and then I have already told you that when it comes to cash budget, it's all about projected cash receipts and projected cash payments. Okay, and then I told you that all other payments and receipts are easy to enter, with the exception of sales and purchases, especially when there are credit sales and there are credit purchases. Now, we are told in the question, after they giving us the projected sales from January to July, that all sales are on credit. All sales are on credit. It means that there are no cash sales in this question. Therefore, we are not going to have cash sales in our cash budget. But we have credit sales, of which I have told you earlier that we do not record credit sales in the cash budget, but we wait and then we collect the payment from debtors. And so cash collected from the debtors will rather be recorded as cash receipts in the cash budget. And we have also been given information as to when the debtors are supposed to pay and the mode of payment. And so the first additional information says that all sales are on credit. On the average, 80% is collected in the month of sale. It means that for the cash budget that we are going to prepare, we are taking note, or we are bearing in mind that every sales figure for each month, only 80% on the average will be collected in the same month of sale. So if you take January sale, for example, which is 200,000, it means that 80% of 200,000, which is 160,000, will be received as cash receipts in January. The extra will not be received, and therefore we are going to shift to other months when they will be received. We are also told that 15% in the next month. So if you take 80% out of 100%, we would have gotten 20% remaining. But we are told that 15% will be collected in the next month. So January sales, 80% will be collected in the month of January, but 15% in the month of February. We are left with 5%, which we are told it is uncollectible. It's bad debt. And I told you that bad debt will not appear in the cash budget, so we ignore that 5%. Understanding the analysis of these cash budgets require a deep understanding of the language that they use in constructing these kind of sentences. So you could have been told that 60% or 50% in the month of sale, 20% in the next month, 10% in the following month. It could have gone on and on and on and on. But the most important thing is that you understand the language being used and you are applying the percentages for the months that are supposed to be collected for. The same could have been done for purchases. If the purchases are also on credit, then it means that you are also going to calculate percentages for the months that they will be paid, depending on the structure or the agreement with the suppliers. But over here, I think the purchases are quite different, because we are told that the purchases will be collected all in 1 month, but they will tell us which month it is. So for now, let us focus on the sales. Now we are preparing cash budget for 3 months: April, May and June. But then we need to do the analysis for the 6 months period from January to June for the cash collection from debtors. So that is going to be our first workings. We are going to prepare, and even it's a requirement, we are told to prepare a schedule of cash collections from customers for the period January to June. Now, we could have met a question where they will not require this. Now, even though they will not require that, it is a requirement that you must do it. Even if the question itself has not required, please do it. Because without the analysis of this schedule, you cannot prepare your cash budget. So it's very, very important that you learn how to prepare. And so let us look at how to prepare the cash collection schedule. We are going to prepare schedule of cash collection from customers or debtors. Okay, so I'll leave this space for the month narration, and I'll say credit sales for the month. Let me put here credit sales in Ghana cedis. And then let me now show the months. So January, February, March, April, May, and then June. So you show your currency signs for each of them. All right. Okay, so this is what we are going to do. We are going to break each month's sales and collect it. You know, we are told they collect them in percentages. So what we are going to do is that we are going to start from the month of January. So January, the credit sales for January, all sales are on credit. And so that is 200,000 Ghana cedis. Please take note of something. Over here, we are told all sales are on credit. That is why I picked the whole of the 200,000 for January and I put it here. It could have been that they will give us this list and tell us that 60% of sales are on credit. What it would have mean is that the extra 40% is by cash. So we would have done the first working before this by splitting the sales figure into credit and cash sales component. Okay, that should have been the first workings. You split your sales figure into cash sales and credit sales component based on the percentages that you were told. That is, if we were told that all of them were not on credit, it means I would have been given a percentage for either cash or credit, and then we'll use that to split. And then you pick the credit sales component that you have now gotten, because you split sales into cash sales and credit sales. Then you pick only the credit sales and you use that for this schedule, because the schedule that I'm preparing is supposed to be for credit sales alone. Don't bring cash sales to work this schedule, I beg you. It is for credit sales. But because we are told in this very question that all sales are on credit, and that is why I have brought the 200,000, because it is assumed that all of them is on credit. So total credit sales for January is 200,000 Ghana cedis, which is the same as the month sales. Now we are going to split it. Now that I have put this here, the question says that 80% of this will be collected in the same month of sale. So it means that 80% of 200,000 is going to be 160,000. That will be collected from debtors in January. So in January, we are going to collect 80%, which is 160,000. Then we are left with the 20%, which is 40,000. We are also told that 15% is collected in the next month after sale. So it means that for January sale, 15% of this 200,000 will be collected in February. So we calculate 15% on our calculator, and that will give us 30,000. We write that in February. The extra 5%, we are told it is uncollectible, so we ignore that. So we are done with January. Then we go to February and we do the same for February. We are going to do that month after month, and that is very important. Of course, I know you may be asking why I did not show workings. The percentages have been given, but if you want to show workings, there is no problem with that. Okay, you would have just put the 80% in brackets here, and then means that you are going to put the 40%, the 15% also in brackets here to show. But we know what we are working at. So please, the concept is what I want you to understand. This is what you do. And then after you are done with January, you come to February. So February sales, the credit sales for February, according to the question, is 250,000. Okay, so 250,000 in February. We are going to also collect it with the same percentage, 80% in the month of sale, 15% in the next month. And so 80% in the month of sale. The month of sale is February. And so we are going to calculate 80% of 250,000. And we are going to collect it in the month, which is February. Please don't make a mistake and bring it back to January, because the month of sale is February. So we are going to begin from the month of sale, which is February. And 80% of 250,000 is going to be 200,000 Ghana cedis. And so we record that under February. And then 15% in the next month. So now the 15% for February will move into March. And therefore we punch 15% of 250,000. And that is going to give us 37,500. And so 37,500 will come under March. So you know what we have done? In the month of February, we took a part of January's money, and we've taken a part of February's money as well. So that is how it goes. Then we move to the month of March. In fact, the 5%, the question could have told you that 5% in the next month, but here we are told that 5% is uncollectible. And so we are not going to put anything here. And then we move to the next month, which is March. This is very simple. In the month of March, sales is 250,000, and we know they all represent credit sales. So the same principle, the month of sale is March. And so the first month should be March. And so 80% of 250,000 will be 200,000. And mind you, I'm recording that under March because it is the month of sale. It is all about the English. We are told that all sales are on credit, and on the average, 80% is collected in the month of sale. And so the month of sale is March. So don't make a mistake and put all of them here. You shift and you make sure that you are putting them under the correct month that they belong. So that is 200,000 Ghana cedis. And then 15% in the next month. In this case, the next month will be April. And so that the 15% of 250 is 37,500. Then we put that there. Then we move to the next month, which is April. So let's go and find out the credit sales for April. So April. In April, the credit sales that we have is 300,000 because all sales are on credit. So 300,000. 80% should be collected in the month of sale. And 80% of 300,000 is 240,000 Ghana cedis. And so we move to the month of April, which is the month of sale, and we record 240,000 Ghana cedis. And then 15% will move to the next month, which is May. And so we find 15% of the same 300,000 and we move it to the next month. I'm sure this analysis is making a lot of sense to you. And so 15% of 300,000 is going to give us 45,000 Ghana cedis. And so we record that there as well. Okay, so we are done with April. We are left with 2 more months. So in the month of May, the credit sales for the month of May is 150,000. So 80% will be collected in the month of sale. And so we find 80% of 150,000 and we collect that in May. And 80% of 150,000 is going to be 120,000 Ghana cedis. Okay, so 120,000 will be 80%. And then we are also told that 15% in the next month. And so we find 15% of the 150,000, and 15% of 150,000 is going to be 22,500 Ghana cedis. So 22,500. That is in the month of June. So we are done with May. And then finally, we look at June. Now, the credit sales for June is also 150,000, which is the same as the total sales. Now, the month of sale is June, and 80% is collected in the month of sale. So 80% of 150,000 will be collected in June, though that is going to be 120,000 Ghana cedis. And so that is 80%, 120,000 Ghana cedis. Now, 15% in the following month, that will be July. But we are only working up to June. We don't have July in our working schedule, so we cannot push it there. So we leave it like that. So that is the meaning. Anytime you are working and it's going into a month that is not relevant, you leave it. So this is going to be our schedule for cash collection from customers. So what we do now is to find the total of each month's collections. So we add that up month by month. And so for January, the total is going to be 160,000. For February, it's going to be 230,000. So the meaning is that this is the total amount that is collected in cash from debtors or customers for the month of February. Okay, and you see that it came from different months. And then for March, it's going to be 237,500. For April, it's going to be 277,500. For May, it's going to be 165,000. And finally, for June, it's going to be 142,500. So this is the schedule of cash collection. We are done with the first requirement. And these figures that we have got in the totals is what we are going to use in the cash budget that we are going to prepare. And mind you, in the cash budget, we are told to prepare the cash budget for only the 3 months, April to June. And therefore, we are going to need only these 3 figures. These are the figures we are going to use. These ones would have been necessary if we were to prepare cash budgets for the first 3 months as well. But anyway, you need to prepare that because it will earn you a lot of marks. So this is the schedule of cash collection from customers. All right, so now that we are done with the cash collection from debtors, let us also focus on purchases, because we are told, I told you from the previous video that the headache about these workings is only on the credit sales and the credit purchases mostly. The rest are no headache at all. So we are told, now additional information 3 tells us that goods are purchased in anticipation of sales in the month preceding the month of sale. Let us pause and do this analysis. Goods are purchased in anticipation of sales in the month preceding sales. So the meaning is that if the goods that were sold in January were bought in December, the goods that were sold in February was bought in January. Goods that were sold or to be sold in June will be bought in May. Goods to be sold in May will be bought in April. So in other words, we buy 1 month ahead of time. That is the meaning. Goods are purchased in anticipation of sales in the month preceding sales. This is English. All right. So now that we've understood that, now they didn't give us the purchases figures. So we have to find our own purchase figures. That is the mystery of this question. But we are told that goods are purchased in anticipation of sales in the month preceding sales. That is the first part. The second part says that sales are invoiced at cost plus 20%. So in the following month when we are selling what we've bought, we sell it at cost plus 20%. In other words, the sales figures that you see here has 20% profit element on them. So for every sales figure that is given, it means that there was a profit percentage of 20% that was added to the cost price that of the purchases before we had the sales figure. And we are looking for purchases now. We have not been given the purchases figure. We are told that sales are made in anticipation of Purchases, sorry, we are told that purchases are made in anticipation of sales in the month preceding sales. So it means that if we take April's sales of 300,000, for example, goods were bought in March towards April's sales of 300,000. And we are also told that the April sales of 300,000 has a profit element of 20% on it, which was added to the value of purchases before we sold it in the following month. So if you really want to get your value for purchases for each of them, then it means that you have to subtract that 20% profit element on it, or you find a percentage, because now this sales figure here represents 120% of purchases. This sales figure represents 120% of purchases. So the purchases is the original 100% that we are looking for, because there is a 20% profit that is added up to the 100% to make it 120%. So this is what we are going to do. So we are going to convert the sales into purchases. And so that is the working I'm going to do for you now, before I even think about the schedule of cash payment to suppliers. And obviously in this question, it is clear that the purchases there are also credit purchases, just like all sales are on credit. Purchases is also on credit. And so we are going to find our purchases figures. So if you want to find the purchase figure for January, then it means that you are going to look at February's figure for sales. So calculation of purchases. So January purchases. Now, purchases for January is going to be derived from the sales of February. We are told that purchases are made in anticipation of sales. So what we bought in January will be sold in February. So let us look at February sales. February sales is 250,000. February sales is 250,000. And therefore, we are going to look at it for January. January purchases is going to be 100 over 120 times 250,000. This 250,000 is February sales. Please take note. So it means that we are looking for the purchases of January, but we are going to pick it from the sales of February, because purchases are made one month ahead of sales. So the sales that was made in February is what we are going to derive our purchases from January. However, this sales figure of 250,000 already includes a profit of 20%, and we are looking for the 100%. So if less, more divide. So we are going to find 100 over 120 times this, and that is going to give us the purchases figure for January. And therefore, the January purchase figure is going to be 208,333. That is the meaning. So this is going to be the January purchase. Of course, I have started with February sales. It means that January sales will inform us about December's purchases. Okay, and it may be needful because we are going to pay it back again. And so let me quickly work December's purchases before we move on. So for December's purchases, which is the previous year, is going to be 100 over 120 times January sales. January sales is 200,000 Ghana cedis, and therefore that is going to give us 166,667. So this is going to be purchases for January. And then let's look at, so we are still on the calculation of purchases. So the purchases for February is going to be 100 over 120 times the sales of March. So purchases for February is going to be 100 over 120 times the sales of March. And in this case, March sales was also 250,000 Ghana cedis, and that's going to give us 208,333. And then we move to the purchases of March. Purchases of March is going to be based on the same 100 over 120, but it's going to be based on the sales of So this will be March sales. And that is going to be based on the sales of April. March purchases will be based on the sales of April. And so in April, sales were 300,000. And so 300,000 Ghana cedis. And we find 100 over 120 of that, which is going to be 250,000 Ghana cedis. And then we move to the April purchases. I'm sure understanding is building. If you don't understand, please go back and watch it again. You may get it with a second repeat. So 100 over 120 times the sales for April purchases will be based on the sales for May. And so the sales for May was 150,000. And therefore, it's going to give us 125,000 Ghana cedis. And then we move to May. So May purchases. May purchases is going to be 100 over 120 times the same. Now this 150,000 will now be for June. So this is for the sales of June sales. And that is going to give us the same 125,000 Ghana cedis. And then finally, let's look at June's purchases. Now, June's purchases will be based on sales of July. But we were given, yes, in the question we were given July sales, 150,000. Even though we are not working with the month of July, they gave that to us for the purpose of finding the June purchases. So 150,000. And that is going to give us the same 125,000. So these are your workings for purchases. I'm very sure that understanding has been achieved. So now that we have gotten the figures for purchases, so look at the stress that we have been put through by the question. In most questions, they will give you the purchases figures and the sales figures. In this question, we're not giving the purchase figures. We have to find our own purchase figure. And this is how we find our purchases figure. And it will differ from question to question, depending on the conditions that are given and the language. So for cash budget, if you understand the English, you are through. If the English is not okay for you, then you really have to work on how to understand the terms and conditions that they give. So this is now the figure for purchases. And we are now going to look at how these credit purchases were paid, because even though it's silent, once all sales are on credit, it's obvious that all purchases are also on credit. And if all purchases are on credit, then we are going to use this same to prepare, just like we prepared the schedule for cash collection, we are going to prepare a schedule of cash payment to suppliers. This time it's not from customers, it's to suppliers, using the same purchases figures that we have gotten. But it could have been that they will tell you that 60% is collected in the month of purchase, 30% in the next month, 10% in the next 2 months after purchase. Or they could have made it any other way, just like they made for the sales. But in this case, we are told from the question that supplies are paid 1 month after goods are received. Okay, so that confirms that it's on credit, because we are told supplies are paid 1 month after goods are received. So that is a pure credit transaction. And it means that for these figures, we are going to pay them 1 month after the purchases. So it means that December purchases will be paid in January. January purchases will be paid in February. February purchases will be paid in March. March purchases will be paid in April. That is the meaning. Supplies are paid 1 month after goods are delivered. So you see, we reverse back to calculate the purchases itself using these percentages. But we are going forward again to pay. And this time we are fortunate. It is not in percentages breakdown. It's just 100% payment. Just that it is done 1 month after. And so when we are preparing the schedule for cash collection, for cash payment, we are going to push January to February and collect all at once. We are going to collect this in March. We are going to collect this in April. We take April's purchases. We are paying rather. So we pay this. Yeah, we pay April in May, and then we pay May in June, in that order. So this is what we are going to do. So take note of the figures. I'm going to clean the board and I'm going to prepare a schedule of cash payment to creditors, and then we are going to do that before we come and prepare the cash budget itself. So these are all workings. Okay, so we are going to prepare schedule of cash disbursement or payment for purchases. So schedule of cash payments or disbursements to creditors or to suppliers. So just like we did for the customers, let me leave this place for the narration of the months, and let me say this place for credit purchases. And then I'll have January, February, March, April, May, and then June. Let me put my currency signs where they are supposed to be, Ghana cedis. All right, so we are focusing on credit purchases. And so, like I told you, if the question had given you purchases figure and maybe differentiated cash purchases from credit purchases, then you are really going to use only the credit purchase figures for this schedule. We don't use cash purchases. But because in this question, all purchases are on credit, we are going to use all of the figures as credit purchases. Okay, so in the month of December, because now we are looking at cash disbursement from January to June, but the condition is that payment is made 1 month after goods are delivered. So we are going to receive in January. January's purchases will be paid in February, but there is something to receive in January, which is December's purchase that I calculated. And so let me begin from the previous year, December. The purchases for December from our calculation is 166,667. So this is the figure. This figure for December will be paid in January, 166,667. So that is the meaning, that December's credit purchases will be paid in January. Then let us look at January. What was January's purchases that we just calculated from our working? It was 208,333. Okay, so I can even list all of them and then collect. So 208,333. Because it's in January, the question says 1 month after goods are delivered. So it will be collected in February. So we write that under February, 208,333. And that is it. And then we move to February itself. So February's purchases from our calculation is also 208,333. And that means that we are also going to pay that in March because it is 1 month after the February, which will be March. So we shift that to March. 208,333. I'm sure this is very simple for understanding. Then we move to March. What was the purchases figure or the credit purchases for March? It's not, mind you, it's not all the time you are going to pick your total purchases. So you need your credit purchases. But because in this question, every purchase is on credit, that is why I'm writing. So don't take me wrongly or don't understand me wrongly, please. Okay, so in March, the purchase figure that we had was 250,000. So March purchases is 250,000 and that will be paid in April. So we write that under April, 250,000. And then we move to April's purchases. In April, the purchase that we had was 125,000. Okay, and so 125,000 will be paid in May. Okay, because it's in April, 1 month after goods are delivered. So it's the conditions of the question that we use to solve. Then we come to May. May was also 125,000 for purchases. And so we move and we pay that in June, 125,000. Of course, there is no need to write June's purchases because it will be paid in July. Our work ends in June. So we are done with the schedule of payment or cash disbursement to suppliers. And so we find the totals just like we did for the cash received from customers. And because these are just one figures, it becomes easier to do the totals. 208,333, 208,333, 250,000, 125,000, 125,000. So these are the total payments that you are going to make in each month. And these are the figures we are going to use for the cash budget. And because our cash budget is from April to June, we are going to use just these three figures. All right, so that is it for the schedule of cash disbursement. So we are now going on to the cash budget itself and then prepare the cash budget for Basti Enterprise from April to June 2018. All right, and so we begin our cash budget. Basti Enterprise. Cash budget for the period of April to June 2018. So let's bring our months: April, May, and June. Put your currency signs where they are supposed to be, and then you are good to go. Okay, so we are going to begin with our receipts. Like I told you, I taught you from the format. So receipts for the period will begin. In this question, there are no receipts apart from the cash collection from debtors. That is the only receipt in this question. And so we'll say receipt or cash collection from debtors or customers. And we are going to get this from our first working one. So we are going to use the first schedule to enter these figures. Now, from the first workings that we did, cash collected from debtors for April was 277,500, if you remember. And then for May was 165,000. And then for June was 142,500. So these are our receipts from debtors. So that is the total receipt as well, because that is the only receipt we have. So you can give it just one underline, not a double underline, and then you continue with your payment. So next line, you say payment. If there was more than one receipt, we would have listed them and give a total and find the total and then give it one underline. But over here, we are only focused on one because that is the only one in the question. So we come to the payment. Let us also begin with our payment to creditors that we did, the schedule that we did, before we look through the question to see if there are any other payments. And so cash disbursement or cash payment to suppliers or creditors. From what we just calculated, what was the total cash payment to creditors? We are using April to June. And so April is 250,000, May is 125,000, and June was also 125,000, if you can remember from what we just worked. And so now let's go back to the question and then find out if there are any other payments that are there. So we are told, additional information too, that overheads are 60,000 Ghana cedis a month and are paid as incurred. So they are paid as incurred. So we pay them the same month, 60,000 Ghana cedis a month. So we will say overheads, 60,000 Ghana cedis, and it's going to run through because it's per month. So we are done with our payment. And then we look at any other payment. We are also told in additional information 5 that general expenses are paid at 15,000 each month. So that also becomes a payment. General expenses, 15,000 each month. So that is it. And I think that is all. Please don't bring the bad debt. I know there was a bad debt in the question, 5% that is not collectible. It is an expense, yes, but it is not a cash expense. We are only interested in cash transactions. And if there was any depreciation, you ignore. So these are some of the tricks. So let us add up our total payments. Let us add up together total payment. So our total payment for each month. And then we can now subtract the receipt from the payment, and then we'll do the balancing. So total payment for April is 325,000 Ghana cedis. That is the total payment for April. And then the total payment for May is 200,000. And the total payment for June is also 200,000. It looks like the payments are all more than the receipts. So we are running into a deficit or a negative balance. All right. So now, after doing this and getting your total receipt and payment, then you say excess receipts over payment. That is the difference. So excess receipts over payment. We are looking for the difference between receipts and payment. Now, over here, receipts were less than the payment, so the difference is going to be a negative balance of 47,500 Ghana cedis. Yes, so I'm going to put that in bracket to show that it's a negative balance, and then we do the same for the other month. Please follow the procedure I'm giving you very carefully. And so when we come to May, the difference between the receipt and payment is 35,000, which is also a negative balance because the total payments are more than the total receipts. And then we come to June. June also has a negative balance of 57,500 because payments are more than receipts. So now that we've gotten the difference, then we can now do the balancing. And please watch. This is how to go about the balancing. You start with the opening balance and then you end with the closing balance. So we are going to add opening cash balance. And then we end with a closing cash balance. The opening cash balance will always be given in the question. And it's mostly given either at the beginning of April's balance or at the end of March balance. If you go through the question, we are told that requirement C, a cash budget for the period of April to June 2018, assuming the cash balance at March 2018 was 20,000 Ghana cedis. So the cash balance at March will become the opening balance for April. So the opening balance is 20,000, and it is only that balance that is going to be given to you. So this is the opening balance for April. It was a positive balance. So we are going to add to the difference. And so if you add a positive 20,000 to a negative 47,500, you are going to have a negative of 27,500. You do a double underline. So that is a negative balance. Now the closing balance for April is now negative, but it will become the opening balance for May, like I taught you in the part 1. And so we are going to bring 27,500 here in brackets. And so negative, negative. So when we add that, we are going to have 62,500 also as a negative balance. And that is the closing balance for May. It will become the opening balance for June. And so when we come to June, we are going to put here 62,500 also in brackets. And that is going to give us the closing balance for June, which is going to be 120,000 also in brackets. So this is how to prepare the cash budget. Now, take your time and go over again and then try and sort yourself out in places you didn't understand. In our next video of cash budget, this is the part 3 of cash budget, we are going to look at a situation where we have been given a condition of a minimum cash balance, where we can only have and keep that minimum. And so it means that if the cash balance for a month is not up to the monthly minimum, we have to borrow and add up. If the cash balance for a month is exceeding the minimum balance, then we have to invest the difference. So we are going to look at the borrow invest decisions as well, and then even make the question more complex in terms of the workings in the third part of this video. Remember to subscribe to the channel if you are here to share this video. Let others also have a benefit. Let us learn together and grow together. Until we meet again next time for the part 3, it is bye for now.